All right, let's talk some market and let's do some trading. Alan Nuckman's with us, Chief Market Strategist at BullseyeOption.com. A little bit of a mixed action so far this morning, Alan. A lot of earnings this week, a lot of economic data. VIX at 17. What are the chances we can hold there?
Oliver, we've got a lot of catching up to do. All right. First off,
didn't we talk last week?
No, you were gone. Remember, my friend? And the week before that, we had a stock
right. Jeez, yeah, wow.
That you didn't, that you, how shall I say, you less than believed in. And I said, you got to trade what you see. Don't think. And it happened to be Mara. It was a stock that went from 8 to 12, and the option gained 100% in 5 days. So, you know, we were talking about how you didn't believe in crypto. I don't necessarily believe in it, but I trade what I see, and it's about risk reward. It's about opportunity. It's about
isn't the stock like right where we left it? It's at $9.
Well, but we also have our targets in place to get out of half when you get to 50%, get out of the other half when you get to 100%. So it's about taking it when you have it.
And so you got out of Marathon, Alan?
Yep, yes. And then last week we got into Marathon Oil for the longer term positioning in
all kinds of marathons
risk
here.
Reward. Exactly. Now, I got to get back to you and Ben. You're lacking positivity. Let's look at this in a positive way. This is momentum. Yes, we haven't broken out yet in stocks or broken down in the dollar, but we are set up for something special, I think, here. And that's what you have to do as a trader. You can either anticipate and have the right tools to do that, or you can react. So right now, I think this natural gas is a great place to talk about anticipating somewhat of a turn eventually in that market, because this commodity is very rarely historically below the $2 level, and that's just where we were.
We're at 226 right now after dipping to 190 last month. Natural gas has been like the poster child of the disinflation trade, I guess, from the heydays of last year's commodity boom. So you think maybe we're going to warm back up a little bit, or what?
Well, let's look at natural gas was at 10 just in August. Now, if we look at UNG, the ETF that tracks natural gas instead of the commodity itself, it's 80% off its August highs. It was at 35. We're at 7 right now. Now, we've been trading between 6 and 10 in 2023, so a move back up just to the midpoint of that range will set up for a pop to that range top at 10. So there's a lot to look at here. We also see the bullish divergence that I talk about all the time, meaning we made new lows, but not new highs in implied volatility. The implied volatility was at 110 back in November. It's at 70 now. Even though we made new lows, you're not feeling that fear, and that's usually a sign when the short sellers will lock in some profits. You'll see a little bit of a reversal.
Okay. So is there a macro theme to this? You think inflation's going to come back, Alan, or what? You're just looking for a bounce?
Again, I'm not a thinker. I'm a trader. Now, this has got a great setup. Like I said, the low in this stock is 6. We're at 7. This was at 35 just a few months ago. There's gaps up above at 9, gap at 17, gap at 30. So the way to position is with a limited risk option. I'm looking at the January option. Yes, January. That's 9 months of time. The January 5 call. Again, the multi-year low that we've seen is 627. So a $5 call right now is $2 in the money. It's trading for $3. So you're in position for success. And if this stock just gets back to the 10, which is the top end of this range so far for this year, then that option will gain 70%.
Got it. And your time frame for this, you're going out to Jan, so I mean, right?
Why not?
Yeah, okay.
Well, why not? You get the whole summer season, and the truth be told that a lot of natural gas is used to produce electricity for air conditioning. So any excitement in the weather over the summer season could really have a dramatic effect, as we've seen in the past. And then you get part of the fall, the beginning of the winter season. So you're in position with plenty of time, and it's only I think an extra $30 more expensive to buy the January option versus the October option.
Wow.
So where people get themselves in trouble is they buy too little time with options, so I'm taking time out of the equation. And where they also get in trouble is they buy the bro options, the $15 calls, which are trading at whatever. I'm going to go with an in-the-money option that gives me the right to be long from 5. Tell me when we've seen 5 in this ETF. I can't find it. So
True.
That's below where we've ever been.
All right. I love it. Good old Alan Nuckman, broad stock market positivity comment, and he goes straight to the nat gas trade.
It all comes back to commodities. Just remember that. Now,
Hey,
I had talked about...
Seems like a high probability trade. This seems like a high probability trade.
Yeah. It's a position. But I have talked about stocks that were not it stocks. We call them something else, but we'll say politely not it stocks. We've done this in Intel, we've done Cisco, we've done a lot of these stocks that have developed nicely when no one liked using this same strategy with that bullish divergence. So the same thing occurred in natural gas. A lot of stocks are poised for some breakout. We just got to see, one more kick to the downside of the dollar, and then we're going to see if we can take out this 4,200 in the S&P. And if that happens, then we'll be looking at 4,600. 4,600 is the target.
All right. Knew I could get an S&P level out of you there. All right. So UNG never hit 5. Not going to do it anytime soon. Give yourself some time for it to get back above 7 to 8, and then the S&Ps, if the dollar breaks down, we're thinking a ramp up back, to new highs basically if we can get through 42. You think if we get through 42, we're going to new highs?
I think it's going to happen if again, I don't try and think. I just let the markets tell me, and the markets have had nothing but positives in 2023. There's not one asset class, crude oil is essentially unchanged, that's not up in 2023, so I don't know why to fight the momentum. Rates are down, dollars down, VIX is down, stocks are up. Earnings, we have such poor earnings expectations that we're overcoming that hurdle dramatically. And revenues, look at revenues and margins. That's the key. Companies are making a ton of money, if I'm going to use that not it comparison here. They're making a ton of money.
Like it. Thanks, Alan Nuckman. Nice Monday wake up for us. Appreciate it as always. Chief Market Strategist at bullseyeoption.com. All right. Bullish on UNG for the nat gas trade and looking for S&Ps to get through 42 and make a push back to the highs. All right. On the record, Alan. When we come back, let's talk some earnings. Visa, MasterCard coming up over the next 40